What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage bullish semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit that subscribe button and that notification bell. That way you're notified whenever we release new videos. We release videos Monday through Thursday and once on the weekend. So make sure you've got those notification buttons hit. Today's agenda, we'll just recap today's intraday price action while we look at the QQQ internals as well. Then we'll zoom out a little bit to look at the wide view from the week, the month, the quarter, and the year perspective. And then we'll zoom back in to set our 4-hour markers and triggers and targets for the day coming up tomorrow. And then we'll review the triggers and targets for the week, month, quarter, and year. All right, so looking at the charts, we're going to bring up the SOXL chart with the internals first. And we can just look at how, while you could have scalped, this bounce here up to previous high day, or scalped this higher low here right before FOMC to, grab a call, or grab the lower high here underneath previous high a day to grab the puts to go down here. And then, with the bounce off of the weak flip, you could have grabbed calls or grabbed calls with the higher low here. So from the scalping perspective, there were plenty of opportunities. I usually play FOMC pretty light, as well as my partners. We know that there can be a lot of volatility there. Not to say that we don't have contracts that expire in October, November, December, and beyond. But we don't usually hold short-term positions. Maybe in the morning. We did play the calls here with the bounce off of basically overnight low, and we rode them up to overnight high. If you follow us on X, you saw our call-outs there, or not call-outs, but our entries and exits there. But we didn't really play anything else the rest of the day. Now, looking at internals, we do have our October calls still, right? And one of the reasons why we continue to hold on to them, if we look at vol QD, which is money going in versus money coming out, and then we look at our breadth indicators, tick Q and ADQD, everything was positive, or above at zero line all day, right? So anything held long term, didn't really give us any worry because of these internals showing that the money was still coming in. It may not have been as in big volumes early on in the day. And breadth was widening. Money was going to all parts of the Qs, so it gave us confidence to stay in those October calls and not have to take profit on those or anything like that. Getting nervous now. You can see here when there was the volatility during the first the SEP release, and then when Powell was talking, we had the volatility here. It does show up here in the internals as well, but you can see that the tick Q that tends to move a lot more than the others, right? So you can see if it gets below zero line, the main thing you want to look for is that it bounces off of the trend lower zone and doesn't stay down here. So you see we got the bounce here, it stayed down here for a little bit, but then it did bounce back up to the zero line, and then it just played with the zero line the rest of the day, just like it did early in the morning. So when you combine that with the ADQD, which just showed breadth widening all morning or all day basically, and then staying up here, yes, it did dip down to the zero line, but it bounced off of it and stayed above it. That combined with the vol QD also bouncing off the zero line, again, just further indicators that bears weren't taking control in the market. The bulls still had control. Now they weren't running away with things, but they still had control. So again, not making our trades based off of the internals, but it's just another tool in the tool chest to give confidence in, or get us out of plays if need be. If we see money flowing out and breadth sinking and going negative, along with the tick, then those would have been indicators to get out, but or other indicators to get. I'm sure we would have had lower highs or something like that on the chart. So let's just look at the bigger chart here just to get back on track. So you see we had the opening print. We did get a little bit action below opening print. We did get, if we bring in yesterday's action on the 5-minute, right here is a lower low. So I'm sorry, yeah, lower low. So here's the low, but it was after a higher high. So it was just a broadening of the formation. So we wanted to just see were we going to get a bounce off an overnight low? If we did, were we going to get rejected by opening print? And that could have been a trigger to get in puts. You can see we didn't here. We pushed back up through opening print, back to previous high day, which also lined up with overnight high. But a little bit riskier play than what our rules normally call for. We did get calls down here off of essentially the bounce off of the overnight low, rode them up to previous high a day, released them, and kept a runner for the SEP release and Powell's press conference. So we saw we got the drawdown after hitting previous high a day, and just rode opening print all day. So really nothing to do until we see here we got the higher low. So again, you could have entered here. Again, the SEP gets released at 1 o'clock and we shoot up, and we get to this 138.2 fib extension of the most recent high to low in that 11-week range that we were in for the past 12 weeks. So the last high to low fib, if you draw a Fibonacci levels for that high to low, and you have the fib extensions on this 138.2 is this 3107, and you can see we did get a reversal up here, not exactly off of it, but there was a reason to watch for a reversal, and it did come. So with that pullback, we did get the bounce off a previous low a day. Then we did essentially get rejected by opening print. Now it did get up to previous high a day, but the volatility was high there, so a rejection there brought us back down to the week flip. So if we would have gone below this 29.14, it would have flipped the week red, and would have put bears more in control at that point. We would have been below last month's high, last week's high, and we would have been looking for lower highs in this area to enter into puts, maybe swings for the end of the week or into next week. But that didn't really happen. We got the bounce, came back up to previous high a day, and just kind of rode that until close, right? A little bit of a pullback at the end of the day, but as we can see in after hours, we're up about 43 cents. So that is up 1.5, almost 2% in after hours. So looking pretty good. Now we do have the jobs report being released tomorrow morning, but that's before open, so won't really have to deal with that intraday volatility. We'll get the signal from the market before it opens as to where we're gonna at least open at, and that would give us a guide paired with our 4-hour markers to know what we're gonna want to enter, either calls or puts. So that's enough of today's action. Let's go ahead and let's take out another chart and let's look at things from the day perspective. So remember, we were in this 11-week, almost 12-week range here. We broke above. Looks like we're getting support here with the higher low from the day perspective, but we did run up essentially into this weekly broadening formation that coincides with this daily broadening formation that was here earlier. This one that was here earlier, this one was just established today, so not quite as firm as these ones that line up with this weekly broadening formation, but they also coincide with this market makers expected to move high. Now, if you're not familiar with that, check out our weekend video. It does go dive deeper into the market makers expected move and how you find that and how we chart that on our charts here. So you can see we're staying above last week's high, and I'm sorry, last week and last month's high. So bulls still looking like they're in control. Again, higher low. Looks like a soft higher low at this point, looking for the push up tomorrow. From the week perspective, let's get a little more clear chart here. All right, and again, we are still above last week's high, so we're in this two up in force, looking to take out this higher high here on the week, this 32.64, and we'll see how that comes into play here on our triggers and targets for tomorrow. But that would, essentially break us through this weekly broadening formation, hopefully pushing up to go and maybe test this weekly broadening formation. Not getting into any predictions. We could always pop through and then get pulled back in tomorrow. On Friday. So we'll just take it as it comes. But for right now, things are looking bullish. Depending on how we break through this broadening formation tomorrow, if we do, if it's just a wick, or if we get a full body, a good good momentum day going up tomorrow. That could give us a little bit more confidence that we'll go test the next one. From the month perspective, let's go ahead and free that up. All right, so again, we are above last month's high, so we are in this 3-2 up. Again, if you're not familiar with these numbers, you're not familiar with the channel, these threes, twos, and ones, basically a candle can do one of three things: be a one, which is an inside candle, be a three, which is an engulfing candle like this one, or a two up or a two down, basically, right? So a two up is just where price goes above the previous day's candle. A two down is where price goes below the previous candle. This is part of the strat. It's a known trading method. There's plenty of information out there. There's information in the description of this video, so if you want more information about that, go ahead and check it out. But anyway, getting back to price action, we are two up in force, looking to go try and take out this higher high on the month. Now that's a ways to go, but we do have the gap up here and the possibility of, if it takes a little while, we don't run into this weekly broadening formation, we can take that out. But don't want to get too far ahead of ourselves. Right now we're just looking bullish. Again, we want to try and break through this weekly broadening formation first and find a higher low above that to make sure it's in our rear view and continue to push up. From the quarter perspective, we're looking good still. We've got the two down, two up in force. The magnitude for that is the high of the candle to the left of this two down. So that high is 36.15. So again, looking to continue to push up, break through this weekly broadening formation, and possibly just ride this broadening formation up to where this high is 36.15. So from the year perspective, again, we're looking even better than we have been the last couple of days. Again, it did trigger the 1, 2 up, 2 down. Magnitude was 621. We didn't quite see it, but in April we did see that 723. So almost fulfilled. But at this point in time, we've been able to flip the year back green. If we are able to continue to stay green through the end of the year, possibly even create a hammer, that would set us up pretty nicely for a 2 down, 2 up in 2026. That would trigger at the high of whatever this year is, and the target or the magnitude for that move would be the high of 2024, which is at 70.08. So not quite all-time high territory, but getting up there. So again, not getting ahead of ourselves. That just shows what could happen, but we need certain things to take place in order for them to trigger, right? So if we get into our scalping chart, we can look at our triggers and targets for tomorrow. So just going over here to our notes. Tomorrow will be Thursday, September 18th. Our notes are obviously from today. Tomorrow there will be 70 trading days left in 2025, and today we closed, I think, 1 cent lower than we did yesterday at 30.47. So we know what it takes to flip the week red, to flip the month red, flip the quarter red, flip the year red. Again, we're above all of those, so we're in full time frame continuity to the upside, which is, again, more momentum for the bulls. The expected move is $2.55 for this week. Again, we have that on the charts. If you need more information about that, check out our weekend video. But that puts a range of 31.85 and 26.75. You'll see how this 31.85 comes into play with our triggers and targets here later on. So first, just looking at the scalp perspective, let's just bring this up. Oops. We have currently a very wide range for our day, right? So the 4-hour trigger to the downside, the previous lower day, and the week flip all are down here at this 29.14 area, 29.16 to 29.14. That also is the top of that most recent high to low in the 11-week range that we had, right? That 29.11. So it could be a good bounce point if we do get downside action. Previous high day is also linked with the 4-hour trigger to the upside, because of course the last 4-hour candle of the day was a 3 or a bullish engulfing candle, so that puts the triggers in tandem there. That is up here lining up with this daily broadening formation, the most recent daily broadening formation that was formed off of yesterday's high, and as well as this 15-minute broadening formation here. So let's go ahead and say that right now we have our overnight low at 30.44, overnight high at 31.09. Either of those or both could change before we open, especially with jobs report tomorrow at 7:30 Central Time. But say we open, let's get the right tool out here and not mess up. Say we open here somewhere in the middle of overnight low, overnight high. The rules of the game that we play are if we get price action that goes above overnight high and a pullback, and we get a higher low above overnight high, above the opening print, then we are buying calls. Once that higher low has been triggered, higher low has been triggered, our first target would be overnight high. Our second target would be previous high a day. All right, so right now, not a whole lot of range to work with, but there's something to get there. Load up on contracts. You get that move depending on where the higher low is. Hopefully, you get something close to the opening print. That allows you to enter, somewhere maybe here. Maybe you unload a couple of the contracts here at the overnight high. Maybe you unload, a good chunk of your position here at previous high day and leave a couple of runners. We've got a weekly broadening formation up here. That's the broadening formation that I've been mentioning that we need to deal with first. So maybe we get a push up through there. We also have the market maker's expected move high up at 31.85. So just from a scalping perspective, that's we exit at the targets, but we can always leave runners that can change from a scalp into a day trade. So say we just get continued push to the upside and we get to this 31.85, then you've got one, maybe two runners that out of your position that you're able to get that full profit out of, right? So that's how we would play to the upside. Again, if we open here, we get price to the downside, then we get a little bit of a recovery, but still get a lower high underneath the opening print. Then we enter puts, first target being overnight low, second target being way down here at previous low a day, right? Now you do want to keep in mind this is last month's high, this is last week's high. You can see how price kind of bounced here previously, so you do want to keep that in mind, that this could be a bounce point. Maybe you unload some of your position here, even though that's not that much of a move, but you just continue to move your stop down as you get lower highs moving towards this level. That way, if you do get a bounce, you can get stopped out and still be in profit. And if you get stopped out and it pushes up just a little bit more, but then turns back to the downside and gives you a trigger back to the downside, maybe on a higher time frame, you can always enter back into puts at that point and then continue to write it down. So that's how we would play it from a scalping perspective. Again, that can roll into a day trade. That's why more often than not, even with scalps, we're buying 1 week out, right at the money or in the money. Giving us a little bit more to work with as far as theta decay. We are towards the end of the week, so Thursday, Friday, that theta really starts to burn away if you're buying same week contracts. So that's just how we would play things. Let's look at things from a 4-hour perspective. All right, let's bring up the 4-hour chart. All right, so we can see, again, we've got this bullish engulfing candle here. So from a 4-hour perspective, from a day trade, maybe overnight swing perspective, we're looking for the 2 up to trigger. So in order for the 2 up to trigger, it would have to go above the high of today, which is 31.25. That does run you into this clump of broadening formations and market makers expected move high. So you want to enter here, but kind of have I don't want to say muted expectations, but just make sure your expectations are in check as to how quickly we may bust through these broadening formations, or slowly we go through them, or even get rejected by them. So who knows, the jobs report could gap us up over those and we don't really have to deal with them, but just want to keep in mind that there is a chunk of broadening formations here from a daily and weekly perspective that do need to be respected, even a 4-hour broadening formation in here. Again, the market maker's expected move high is not an end-all be-all. It doesn't mean price action has to stop here. There's still, it's a 70% chance that price will stay within that range, but that leaves 30% chance that it could go beyond it. So we've seen it in the past. We've shown that in the past that how it can go past that. But it could show some sideways action or slow down or a small reversal before going back up when it reaches this level. Just because, we're not the only ones that know about this level, and there could be a lot of people that start to exit at this level. All right, so that's to the upside. To the downside, we would take an entry on the low of today, 31.25. wait, not 31.25, I'm sorry, 29.16. That would, pretty much coincide with the week flip, so that would flip the week red if we go below this level. Our targets to the downside, just because we're more in a pretty good uptrend right now, are going to be the lower low here and the lower low here. So 28.92 and 28.79. Right? If you want an extended target for the 4 hour, you can bring that 28.13 back into play, which is the year flip. This would flip the year red if you go below this. This is also last week's 50% level. So we've also talked about in the past how gaps, also, while they do like to get filled, they do present bounce or resistance points. So it's perfectly reasonable to think that we could get a bounce off of there, even if we do get the push down tomorrow. So from the 4 hour perspective, just looking at our notes, again, we've got the 3-2 down that triggers at 29.16. Targets are 28.92 and 28.79, right? To the upside, it triggers a 3-2 up, and with the trigger at 31.25, target 31.68, and then 32.28. Now, we do need to keep in mind, right? One of the major reversals from the strat perspective is 3-2 up, 2 down, or 3-2 down, 2 up. So even if we get the push to the downside, we want to watch for any type of reversals. And if we do get a reversal and the second 4 hour candle of tomorrow goes above the high of the first hour candle, it's perfectly reasonable to enter calls at that point, looking to go back to the high of the 3. Same as to the downside, right? To the upside, if we get the 2 up tomorrow in the first 4 hour candle, and then the second 4 hour candle goes below the low of the first 4 hour candle, that triggers the 3-2 up, 2 down, and you're free to enter. I don't want to say you're free. It would be perfectly reasonable to enter puts to the downside, shooting for the bottom of that 3, right? So just keep that in mind. That is a major reversal from a strat perspective. From the day perspective, let's go ahead and bring that up. Right, so again, we have a bullish engulfer on the day. A 3-2 down would trigger again at the low of the day, and we've got our extended target. Our magnitude, right? So it's a 2 up, 2. I'm not sure why I have that there. Green 3-2 down. So that's what I have. So if we have a 3-2 down, then it triggers at 29.16, and we have target 28.79, 28.29, and 28.13, right? So we've got those levels drawn out. And then if we trigger to the upside, we've got a green 3-2 up, which triggers at 31.25, and we target 31.68, 32.28, and 32.64. That 32.64 should ring a bell because it's that higher high on the week perspective, right? So if we get movement to the upside, obviously we've got to look out for these broadening formations and the market maker's expected move high. But we do have the 32.28 and the 32.64 that are on the board here, right? 32.28 comes from I'm sorry, 32.39. I'm sorry, I must have fat fingered that. 32.39. That will be our target, right? So the 32.39 is that 161 fib extension from this latest, that last high to low in the range, right? So there's your triggers and targets for the 4 hour and the day. Just going back over the targets for the week, we are still in force with the 2 up, 2 up. We reached that 30.55 first target, which was the 61.8 fib retracement of the 2020 low to 2021 high. And now we're looking for that 32.64, which is the higher high on the week. If we reach that, we've got the 33.33 and 34.42 levels up there as well. If we were to go, for whatever reason, if jobs sends us tumbling down tomorrow, we would still got a ways to go. $4 move in SOXL is quite a big move at this price level. So don't think it would hit tomorrow, but the week could still trigger a red 3 at 26.57. Right. From the month perspective, we are still in force with the 3-2 up. We triggered at 29.66. We reached that first target of 30.55, and we're looking for that 31.41. Right. So did we reach it? No, 31.25 is what we got to today, so we almost reached it. And then we're looking for the higher high on the week, and then the next higher high on the week as well. From the quarter perspective, we are in force with the 2 down, 2 up. It triggered at 25.84. The magnitude of that move is 36.15. So we're still looking for it to reach that magnitude. Again, that doesn't mean it has to happen this month. This quarter. It could, take a combined this quarter and next quarter to reach that level, but that is the magnitude of the move, the 2 down, 2 up reversal from a strap perspective. So we are looking for that 36.15. Again, the year is the one that's kind of got us moving sideways here the last 12 weeks. We were able to finally flip it back green, so it's no longer in force on the 1, 2 up, 2 down. We're just trying to stay green, trying to stay above this 28.13, and as long as we can do that, we can setting ourselves up for a 2 down, 2 up reversal for 2026. So not the most bullish thing in the world, but definitely not the most bearish thing, especially when combined with the other time frames, right? So I hope everybody has enjoyed this video. If you have any questions, please let me know in the comments. If I've skipped over anything, gone through anything too fast, let me know. If you want me to cover anything more in depth, please let me know. Make sure you check out the bonus content on the YouTube channel. It does have more about how we set up our, the basics for our charting, and then a deep dive into the precision trading, or the 4-hour markers and the triggers and targets for our scalping and day trading. So check those out if you are looking for more information. If you're still looking for more information after checking those out, definitely let us know in the comments. We'll be glad to help. And again, if you think there's anything that we can do better with these videos, please let us know as well. We're perfectly fine accepting constructive criticism. But anyway, I hope everybody enjoyed the video. Please give it a thumbs up. It really helps the channel grow. We're not selling anything here. We're just trying to provide as much free advice and education that we can. So get you some rest tonight. Make sure you wake up refreshed for tomorrow. We've got the jobs report in the morning before the market opens, so look for more volatility then. But we've got our triggers and targets here. If you need to pause the video, do so. If you need to rewind, make sure you do that. But we've got our triggers and targets for tomorrow, and then the week, the month, the quarter, and the year. And we'll just see you out on there on the trading floor tomorrow.